Hey everybody, Bolt to the Bust. It is Wednesday, September 23rd, 2020. Quick update today. Stocks got hammered, metals got hammered. Let's take a look at the Dow, the NASDAQ, the Russell, down 2, 3, and 3%. We see crude oil dropping now to about $39.22. Gold and silver, here's the big story in my opinion. Gold right around 1859. Silver a 4% drop down to $22. Now I've said this in several episodes. This is where I'm going to start buying again more heavy-handed. I did pull back on the buying. I told you when it went up to 26, 27, 27.50 that it went up too far and too fast. There's always going to be a pullback. For those that have been stacking silver, do not let this freak you out. Don't worry about it. Nothing goes up in a straight line. If you look at a chart over the long term, there's always ups and downs, even on the way to a long-term bullish trend. Now, it doesn't mean that it can't pull back even more, and guess what? If it does pull back more, I'm going to buy even more. Could I be wrong? Absolutely. That's why I say I don't give investment advice. I'm just letting you know what I'm doing. But everyone's situation is different. I mean, there's people that shouldn't even be buying metals right now because if you don't have at least some money put away for an emergency or a rainy day, you know, the last thing you want to do is have a car breakdown, and now you've got to put the engine repair or whatever repair it is. You don't want to put it on a credit card, and then you can't pay the card off at the end of the month. So now you're paying interest, which could be 17%, 20%, or even higher. You know, you don't want to be paying interest to a credit card company at 20% in order to stack gold and silver on the side. You know what I mean? So you're losing a lot of money when you're not paying off that card each month. So that's why I say investment advice, don't get it from somebody on YouTube. Don't get it from anybody unless they're able to analyze your specific situation, right? Your monthly income, your savings, your monthly expenses, all that stuff. So I just wanted to put that out there because a lot of people are asking me, am I buying? Am I buying? Well, I haven't been. I slowed down on my buying, but now I'm going to buy more heavy-handed. But again, that's me. That doesn't mean that you should do the same thing. And it's only been about 3 years now since I've been in the position to be able to pay off my credit cards in full each month. I used to have to carry balances. And if you've been on this channel for a couple years, you know that I sold an investment property almost 2 years ago. And that's what finally got me out of debt, except for my primary home. I still have a mortgage. But finally was able to get out of debt. Continuously now able to pay off these cards in full each month by the grace of God, by being very restrictive on my spending, cutting out the unnecessary expenses. We talk about personal finance here, you know, quite a lot. Thanks to you and your help, all my supporters on Patreon, thank you so much. You are helping me stay afloat while I live in this way over expensive state of California, where the prices from everything from car registration to taxes to gasoline, car insurance, home insurance, you name it, is just astronomical. So I just wanted to take a side note here real quick and just say thank you for all your support. Now let's go ahead and get into some other news here. Speaking of stock sell-off, look at Tesla down another 10% today. Now this stock was just screaming bubble. Let's go out to a 5-year chart here. If that doesn't scream bubble, now without even looking at the fundamentals, the PE ratio, the earnings, just looking at the chart, I mean, it just screams bubble all the way. I would not want to be buying Tesla right now unless I was day trading, which I don't do anymore. And honestly, regarding the stock market sell-off, I am a little bit surprised that it did sell off this big, considering what's coming up in November. And it looks like the master manipulators, maybe they're letting it drop so they have more excuses to go ahead and bring more stimulus into the markets and into the economy. And speaking of stimulus, if we really were in this amazing recovery right now, it seems like we wouldn't need more stimulus, right? Or is the illusion of this recovery only possible because of the stimulus? Well, recent article right here, CNBC, Fed calls for more stimulus. So it looks like that the amazing recovery is only because of the easy money, the handouts, the stimulus, the enhanced unemployment benefits, right? When half of small businesses are not able to survive, when they're going to close down permanently, should you really expect a V-shaped recovery without massive stimulus and intervention? We've got some bad news for people in several states. Another CNBC article, $300 unemployment benefits end in 9 states as stimulus hopes fade. We're still waiting to hear if and when there's going to be a next stimulus check. There's debates back and forth, the left versus the right and so on. But this economy has been coming unglued for a very, very long time. Remember, they had to loosen up the banking system. They had to loosen the lending standards. And not just that, they had to get rid of the reserve requirements for banks. So now essentially banks can lend out unlimited amounts of money, completely unleashed. The amounts of stimulus, the market support, all of the new debt that's been accumulated on the Fed's balance sheet, all that tells us is that the economy is coming unglued. Now you may not notice it unless you're really paying attention to all these different indicators. And to the average observer, they see the manipulated unemployment number dropping. They see that households now have more savings, but it's not all households. Remember, this is a K-shaped recovery, so the people that were already doing pretty well are likely doing even better, but the bottom half and the lower income brackets, they're likely doing a lot worse, and you can see it in a lot of different places. Let's talk about the uptick in homelessness, just one of many examples. Just so many articles that I see every week. It seems like several articles about homeless upticks in different areas here. Youth homelessness increases in Los Angeles. I told you I drove through Los Angeles just recently and just couldn't believe the amount of tents under the bridges, the graffiti, the trash. It just seems like it's gotten twice as bad just since 8 or 10 months since I went there last time. And here's one out of Pennsylvania. Erie News Now: increase in demand for food leaves homeless shelters scrambling. All right, the food lines are surging out of control. Again, it looks like the poor and the middle class being decimated here. Another recent report here out of NJ.com: Hudson County homelessness increases 6% last year. Another one here: Campbell residents frustrated over growing homeless encampment next to Highway 17. New camps popping up all the time. This is out of San Francisco. sanfrancisco.cbslocal.com. The Joplin Globe, this is out of Missouri. Homelessness Coalition sees increase in homelessness, need for services, and on and on and on. So this is going to be really, really bad. I don't know how else to say it. I mean, imagine if it were not all for the assistance, the propping up of this economy. People allowed to pull money out of their 401ks now without penalty. And what's going to happen down the road when these people have no money to retire on, especially if we continue to see inflation, if we continue to see this manipulation 5 years from now, 10 years from now, 20 years from now. I mean, this could be Venezuela 2.0, where prices keep rising because of the endless propping up of this banking system, and asset prices are going to continue to be severely disconnected from the average household income, all because of the intervention and the monopoly men, the money machine, the master manipulators. The fiat funny money bankers do not want to let prices correct to match what actual supply and demand would normally create. An economy that's completely disconnected from reality, from fundamentals, right? I mean, you tell me, what should we call this? But we're going to wrap it up, a short one today. Thanks everybody for your support. Thanks for being here. Please like and subscribe. This channel is not on the top of the search results. When you type in economic news, of course, you get the mega corporations at the top of the search results, typically. But thanks everybody for watching. Stay prepared, stay well, stay healthy, stay positive. I know it's a tough time right now for a lot of people. Try to stay positive. Hopefully after this next downturn, we'll see some sort of awakening where people are going to realize that we've been duped by the invisible hand. Bye, everybody.